How do you measure inflation? If I measure inflation against something I can manufacture for free, inflation doesn't look that high. If I measure inflation against a yardstick that is fixed, that's thermodynamically sound, then you see the true measure of inflation. S&P is one example of that. This is Miami Beach. Miami Beach runs 96 blocks. There's that much beach. 100 years ago, there was that much beach. No amount of semiconductor technology or factories make more beach. The dollar has fallen 99.8% against the beach in 100 years. That's how you start to see what's really going on with the world's strongest currency. Now I have some bad news for you. We're not in America. We're in another country. Foreign currencies are collapsing against the dollar. This is the Argentine peso against the dollar. In 20 years, the peso goes from 1 to 500. The peso's lost 99.8% of its value against the dollar at the same time that the dollar's lost 75% of its value against the S&P index. I'll let you do the math.
You are losing 99% of your wealth over a long enough time horizon if you don't act now, is the message out from founder of MicroStrategy, Michael Saylor. In perhaps the most compelling keynote of all time, Michael Saylor breaks down with extreme precision and data why currencies all over the globe, including the US dollar, are collapsing in real time and destroying your wealth. Saylor's ultimate point: buy and hold Bitcoin and continue buying the hardest money on earth, as it's the only winning strategy on a long enough timeline. Make sure to stick around to the end of the video because this is the most convincing keynote you will ever see on Bitcoin, a true masterclass. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
The world reserve currency is the dollar. It's collapsing against assets like the S&P index, like real estate, like gold, like art. And this is a sobering thought. If we had sound money, the dollar wouldn't collapse. But you've probably seen this chart. This is the dollar collapsing against consumer goods. Consumer goods, the dollar is 95% weaker. It means consumer goods are 20 times more expensive today than 100 years ago. Now, consumer goods are manufactured items: candy bars, bottles of water, Netflix videos. They're things that are coming off an assembly line and they're getting stamped out with a low variable cost. This is the cheapest, least scarce stuff in this civilization, and yet it's 20 times more expensive. Now, a lot of times government officials show you this chart and they say, well, this is the impact of inflation. This, in fact, was generated by the Bureau of Labor Statistics. But the sad fact of the matter is, this is as good as it's ever going to get for you. This is a different picture. What if it wasn't easy to stamp out manufactured biscuits or Netflix videos? What if you had to do work to dig the gold out of the ground? Gold is a bit harder. And so the dollar has collapsed 99% against gold in that same 100 years. Not 95%. By the way, gold is not scarce. We keep creating more gold. We get better at it, but at the end of the day, it's a bit more scarce than, Netflix videos, and it's a bit more scarce than drywall. Let's talk about something that's even more scarce. The 500 most valuable companies in the S&P. The US dollar has lost 99.8% of its value against the S&P index over that same 100 years. That is actually a closer measure to the inflation rate. This is the world's strongest currency. This is the currency backed by the country that won every war in the last 100 years. This is as good as it's going to get for you. This is as good as it gets. It will get worse. Now, how do you measure inflation? If I measure inflation against something I can manufacture for free, inflation doesn't look that high. If I measure inflation against a yardstick that is fixed, that's thermodynamically sound, then you see the true measure of inflation. S&P is one example of that. This is Miami Beach. Miami Beach runs 96 blocks. There's that much beach. 100 years ago, there was that much beach. No amount of semiconductor technology or factories make more beach. The dollar has fallen 99.8% against the beach in 100 years. That's how you start to see what's really going on with the world's strongest currency. Now I have some bad news for you. We're not in America. We're in another country. Foreign currencies are collapsing against the dollar. This is the Argentine peso against the dollar. In 20 years, the peso goes from 1 to 500. The peso's lost 99.8% of its value against the dollar at the same time that the dollar's lost 75% of its value against the S&P index. I'll let you do the math. If you run a company in Argentina and you're going to work hard, you're going to have to grow your revenues from 1 million pesos to 500 million pesos over 20 years to stand still. And that's why I say no amount of hard work is going to solve the problem of being on the wrong side of an economic war. There's only one strategy here. You have to get out of that peso. You have to exit. This is the lira. This is before this week. It lost 95% of its value. Now the number is about 97% of its value against the dollar. This is the rupee. It's lost 90% of its value against the dollar. So that 99.8% loss is another 90%. So we're kind of running out of numbers to calculate just how much of your wealth has gone from you to the government. When the government actually collapses the currency 99.9%, what it means is over 100 years, they in essence take all of your wealth and they redistribute it to their cronies, to whoever they want. And that's the rate at which it's going. This is Pakistan, 82% against the dollar. This is the Brazilian real, 65% against the dollar. Conclusion: if you want to preserve your wealth, you have to convert that currency into an asset that's scarce, desirable, portable, durable, and maintainable. Right? There are certain things that are scarce and desirable, but they don't move, like beachfront property. And by the way, maintainable, if you own $1 million of property in Miami, you have to pay $20,000 a year, every year, to maintain it, and it gets assessed up. So you have to have $1 million to cover the taxes on $1 million of property in Miami Beach over about 20 years. You can't maintain it. So you're going to be a smart investor. Here's smart investors, people bragging about making money in the stock market. The S&P index is going up 7 to 8% a year. And so you must be really smart. You invested in companies that are making good decisions. Look at the money supply. The money supply is going up at the same rate as the S&P index. And so what you begin to realize is most investment gains aren't really gains at all. All you're doing is simply tracking the monetary inflation rate if you're lucky. What's the winning strategy? There's only one winning strategy that I see. It's hold the best money. And if you hold the dollar, which is the best currency, you're going to zero. If you hold a weaker currency, you're going to zero in a few years. Gold is a sort of better money than the currency. Stocks are a better money than gold. Bitcoin is a better money than the stocks. But let's talk about this a bit. The conventional organization, company, investor, they think the S&P index, they think corporate equity is the best money. They have monetized it, and that's what they're using. And so I wanted to break down what corporate equity looks like versus Bitcoin. You know, the traditional return of the S&P index is about 7% a year. Well, Bitcoin should, in theory, return 14% a year. It's returned a lot more. It's returning 40, 50% a year over the past 3 years and much higher over a longer period. But I want to lay out the reason that companies don't work as well as perfect money or digital money. First of all, you've got the dilution that comes from management. The management's going to pay themselves 1% of your return every year. You've got the risk of labor. Companies unionize, they have to pay labor. The cost of labor keeps going up. It's another 1%. You've got competition. There's going to be someone that's going to produce more gold or more iPhones or more something, more computers. It's going to cost you another 1%. You've got technology. You had a really good camera business, and then the camera becomes software. It's going to cost you 1%. You've got regulation. The EU is going to actually fine Facebook or Google for doing something on the web. It's going to cost you 1%. You've got taxation. If I can locate your employees, locate your management, locate your company, locate your headquarters, it's going to cost you 1%. And then you've got war. And the war may be a hot war where you've got a tanker and I blow it up, or it may be an economic war like a tariff, and I'm just going to put a 25% tariff on you. Companies have all those risks. If you ask what's the cost of it, about 7% a year. What you can expect is over time, over 100 years, you're always going to pay the 7%. Now, what's the implication of getting a 7% yield versus a 14% yield? Because Bitcoin actually avoids that. How does Bitcoin avoid it? The Bitcoin virtues are we replace management with cybernetic control. The software controls the system, not people. The software does the work for free. I replace labor with a digital system. I replace competition with an immaculate conception. There's only one Bitcoin. Satoshi gave it as a gift to the world. There's no competitor. There's no second best. Why? Because someone created this, gave it away to the rest of us without any beneficial interest in it. That's what makes it unique, irreplaceable, special. That instead of technology risk, like the iPhone 15, Bitcoin is just money, 1/21 millionth of everything there's ever going to be. It's not going to actually obsolete. It's immortal product. In 1,000 years, you're going to want to own 1/21 millionth of everything there is. In 100,000 years, you're going to want to own 1/21 millionth of everything there is. That's how you escape the competitive downdraft, and that's how you avoid the technology destruction. And of course, with regulation, taxation, and war, by being a digital asset, you're living in cyberspace. You can't destroy it. It's indestructible, it's incorruptible, it's global. Bitcoin's going to duck the exposures of these other systems. So what's the implication of that? If you had $1 million today in your company or in your family, and you hold it in cash in the world reserve currency at a 7% inflation rate, in 100 years, you will have, in today's dollars, $977. You will go from 1 million to 1,000. You'll lose 1,000x. It's 1 divided by 2 to the 10th. If you take all your $1 million and buy government bonds yielding 3.5% interest, you're going to have a 3.5% negative real yield. Carry that for 100 years, you're going to have $31,000. 3% of your wealth. If you're brilliant and you invest in the S&P, you're going to have $1 million. You'll have the same value, the same wealth in 100 years you have right now, but no more. If you take half of it and invest it in Bitcoin and the other half in the S&P, you're going to have $512 million. And if you go 100% Bitcoin, you're going to be a billionaire. All you got to do is flip your $1 million into Bitcoin, hold it at 7% real yield 100 years, and that's the money you have times 2 to the 10th. And so you can see in a very simple way, there's a winning strategy, there's a losing strategy, Every other strategy is, the trading, the investing, is just a waste of time. You could ask, what about the real world? Here's real world. In the last 2.5 years since MicroStrategy entered Bitcoin, Bitcoin has outperformed the S&P, the NASDAQ, gold, silver, and bonds. Bonds are destroying wealth. Silver is destroying wealth. Gold is destroying wealth. Bitcoin's crushing everybody. And you can say, well, what about MicroStrategy? All the guys on Twitter, they're all like Twitter trolls. Hey, you lost some money investing in Bitcoin. That's the MicroStrategy performance. That is your company on a Bitcoin standard. That is your family on a Bitcoin standard. See, you keep dollar cost averaging or Bitcoin cost averaging. And at the end of the day, it doesn't matter at what price you buy. What matters is you keep buying and you don't sell and you don't invest in the bonds, the silver, the gold, and the rest. The future? The world's in an economic war, but the world is beginning to realize Bitcoin is the superior asset. And as they realize that, Bitcoin is going to demonetize all these other assets over time. It's going to first demonetize gold, because gold doesn't make any sense, and then it's going to demonetize the other store of value assets, the real estate, the S&P index, the bonds. And so you're going to get a 30x bump as we demonetize gold, but there's no reason why you can't have a 500x increase in today's dollars by demonetizing these other things. And I'll end with this thought. We have laser eyes, because laser eyes say focus on what you can change, save what you can save. In this particular case, you can make Bitcoin a success. You can tell the world about Bitcoin. No country can stop inflation. Nobody can stop inflation. I can put you in charge of the world. You cannot stop inflation. 99% of the companies, they cannot outrun inflation. 99% of the workers, they cannot outrun inflation. 1% may beat the market by skill and luck. Don't assume you'll be the 1%. Everybody can buy Bitcoin. So, buy Bitcoin. Thank you.
So there's Michael Saylor with a genuine masterclass on why buying, holding, and continuing to accumulate Bitcoin is the only winning strategy when it comes to wealth preservation. I believe it's becoming more and more well known and widespread that inflation eats away at your wealth over time, especially after 2020 and the outrageous money printing. However, what isn't well known is that Saylor brilliantly highlights is that investing using the traditional strategies like ETFs or the S&P 500 isn't actually building wealth. It's just matching the rate of true inflation or the expansion of the monetary supply. The only asset that is outpacing true inflation so far is Bitcoin and crypto, which makes it an extremely compelling value proposition. But let me know what you guys think. Do you think this was one of Saylor's best keynotes of all time? Are you convinced of the Bitcoin strategy? Let me know in the comments. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.